Market conditions majority bullish. S&P futures up 0.12 this morning, still hovering around those all-time highs and inside of really this consolidation zone that we've seen now since July, where we've been bouncing off of this demand block around that 63.50 range. Still expanded in trend, but softening just a little bit at these levels. We're seeing breadth still holding relatively weak at 58 and majority bearish on that. That's the number of stocks above the 50-day moving average. So you've got 60% roughly that are trading above the 50-day moving average, and that means 40% trading below that. So I ideally would like to see it a little bit stronger, but it's been hovering in these weak ranges now for most of this rally that we've had over the last couple of months. VIX holding around that 15 range, 1563 this morning, and pulling back just a little bit. Majority bearish here, softening, potentially a little bit of divergence happening there as well, where they're compressing. We're getting some compressing on volatility. We know that as the market is, kind of getting a little bit skittish right here. There's just that it's a little bit of indecision in terms of the overall breakout and the bullishness, particularly now where we're seeing some weak job numbers. Bonds really took a hit the other day, or at least bonds rallied. Rates have been dropping. We'll talk about that here in just a minute a little bit as well. We talked about VIX in that 15 range. S&P 500 closed out at 14.0 on the daily and 14.0 on the weekly as well. Dow Jones Industrial Average also holding that demand block here around that 54.90 range, and 454. 450 is the upper end of that range currently as well. We are seeing triple Qs go back into momentum as well. It's we're well above the 236 location, above that momentum zone, but we've now got this demand block here, so we could see tech also have a breakout. It's not quite back to all-time highs, but could today if we break out and get a little follow through. We'll see what we end up getting today. We're also seeing on Russell 2000 pressing up into this supply block right here, 238 on that, not to all-time highs yet, but we've talked about this, which it's moving in the right direction. It's starting to work that direction. That is adding those small caps in is going to help with pushing the overall market as a whole even higher. If we take a look at, but that being said, it could also reverse. We're getting pretty expanded right here. Be aware of where that is. Retracement could pull back into that 230 range. So any retracements we get, really across the board on any of these indices, are still going to be bullish scenarios where we're pulling back, looking for demand. If we break through this demand right here, then we're potentially going to get a lower, a new low. Okay, we're breaking these lows, and that could be a trend shift that starts to happen. It hasn't happened yet, but it could happen. It could happen in a day if we get some kind of news item that really reverses the market. We could also get some confirmation breaking to the upside. The news is starting to stack a little bit more and more against the market, with jobs and the economy potentially slowing. All of those discussions as those are coming around again. We're also have some seasonality with September, October traditionally being relatively weak months. Let's take a look at USO. That's been hovering and playing around this 50% range. It's back to that range again today, and we'll see if we get in demand. That tight compression has shifted it back to majority bearish at 14 on the daily and the weekly time frame. Gold still having that nice fall through breakout, and the weekly time frame you can see a nice clear, clean breakout, very fanned out and expanded, but it's just seeing a huge amount of demand for gold still at these levels. We'll find out why eventually, and that could be happening as a part of the tariffs, a part of the dollar, a part of everything that's just going on globally, and having to do with some of that perspective of what's actually going to be happening. Are we moving? Is the dollar just starting to lose control, and gold and Bitcoin and some of these other foreign currencies starting to become a little bit more common? That certainly could be unfolding right here. If we take a look at the 2-year, that one actually getting beat up here the last few days. We talked about the compression. It's starting to expand now to the downside, 349. The double-edged sword with lower interest rates are that a bond market wants lower interest rates so that the ability to borrow, the cost of capital is going down. That the theory is that the cost of capital is coming down, individuals and organizations primarily are able to either refinance debt, make the cost of borrowing, the cost of capital just lower and lower. That creates a little bit more liquidity, a little bit more lubrication to get things going, incentivize businesses to keep borrowing and growing, and so we're seeing that happening here. We haven't seen it in the Fed yet, but we are seeing it in the bond market itself. On that 2-year note, the 10-year doing the same thing. Compression starting to fan out. The double-edged sword of that is that the if the economy is really slowing, the job market is getting really tight, then then that could be an anticipation. The Fed's typically notorious for being very late with their rate decisions, typically once the economy has already made a significant move, and that could be the case right here as well. So there are some things that are happening out there that could affect stocks. We've yet to really see the market absorb really the overall full decision of the bias that it really wants to take, and that's just kind of proving itself here in this flat consolidation right now. If we take a look at a couple stock ideas, we're seeing coal and steel stocks really have a nice move. We've got BTU with that nice confirmation bar. We're seeing Cleveland Cliffs also nice confirmation bar. That's in the steel space, and then METC with a good follow through on in the coal name. We're also seeing a bunch of biotechs that are moving nicely, and one other, the big cap that we saw in here, Tesla. So we're seeing Tesla. This actually is a pretty nice looking bullish pattern as a whole. It's kind of long and drawn out and choppy right here, but you're getting a series of higher lows, okay, and it's approaching this 360 range. You could get a breakout here on Tesla if we come out here and look at that on a weekly time frame. A little bit, it's not quite as impressive here, but that range right here, if Tesla breaks out of that 360 range, it could really start to get some acceleration, and particularly if the market breaks out as well. If it does, then we could see that stock move to the upside. A couple of those other biotech names as well that are getting those patterns. Let me squeeze things back over here a little bit and get that lined up. EISC, that's in the chemical space. Seeing some aerospace names as well. If you'd like to join us in the Discord server, there's some links in the description. That'll get you access to all of the criteria as far as the settings to get the new buy signals, so that you can go through these on your TradingView platform as well and review all of these each morning. That'll do it for today's update. Everyone have a fantastic day today.